EMIC and CNA Hardy have collaborated on research that helps risk managers to demonstrate how they add value. To discuss that, I'm joined here in the studio by Diane Maxwell. She is CEO of EMIC, and by Martin Richards, Marketing and Communications Director at CNA Hardy. Well, Diane, first of all, why does this research matter?
So most research in the risk and insurance space focuses on the downside, inevitably, and certainly discussion at board level and often at executive committee level would talk about disruption, loss, mitigation, and often insurance has a cost. So it's all a little bleak, really. Not only is it bleak, it misses a huge opportunity to talk about how risk and insurance and good risk management really creates value and really adds value to the business. And I think when we've done this research, and the starting point is if you think about what's discussed at board meetings, typically it's a set of financial metrics that the business is aiming to reach by the end of a financial year or quarterly. So the discussion is often around balance sheet health, and there'll be a number of elements within that. Often balance sheet health and those metrics are set by the sector. They vary sector by sector, and they do vary depending on where we are in the economic cycle. But there are some consistencies around what you would be looking for. So you might see a risk manager coming in talking about risk appetite and risk register and other things. And the board wants to talk about the balance sheet and sort of financial metrics, really. So the work explores how we can better translate the value that risk and insurance brings to the financial balance sheet and to those financial metrics. And I think one thing we've said in the report is it's about taking risk and insurance from a cost centre to a contributor.
Absolutely.
And thinking about how we can do that.
Yeah. So, Martin, how is this research different? Because initially somebody might say, well, it sounds like there's a clash of cultures. That's not atypical in the business.
Well, like with all good research, we started off with some questions and building on what Diane was just saying. So how do risk and insurance professionals communicate the value of what they do? Do they use the same language that boards and C-suite use in their discussions? And does it matter if they use the same language or not? So we started off by thinking what we need to do first is to define what that language that boards and the C-suite actually use. And this is where we did something different from other research that we'd seen. Because the first thing we did was a bit of desk research to see, had this been covered before the topic that we're discussing today? And it hasn't, as far as we're aware. So what we then did is say, well, actually, if you're as a board member or in the C-suite, some of the people that you have to pay attention to significantly, if you're a listed or publicly traded company, which many of the companies in EMIC are people like equity analysts, they're bond analysts, they're credit ratings agencies, because all these companies, they're issuing stocks, they're issuing bonds, they have credit ratings. Now, the people who assess those are people like the analyst community, equity analysts, bond analysts, credit ratings agencies. Now, how they assess value, that financial analyst community, how they assess value is what shapes a lot of discussions that go on in boards and within the C-suite. So we thought, let's ask them. So that's the first thing that we did, is that we got some individual interviews with a range of financial analysts who in equities, in bonds, credit, etc., and talk to them and say, tell us what you think matters and how you assess the value of companies. And then what we did after that is we played all of that information back, because that's the language that is used in boards. We played all of that back in a series of roundtables of senior risk and insurance leaders at EMIC. And then after that, a series of one-to-one individual interviews with those senior leaders. So that gave us a really good insight as to those two groups of people. I was lucky enough to be involved in every single discussion, so I heard every single word that was said. But that real starting point was what the financial analyst said, and that's where we began this.
And what did the financial analyst community tell you on the back of it?
So it's really interesting, because we had a range of analysts looking at, Diane mentioned it actually, about a range of sector specialisms. So some of the analysts were sector specialists in telecommunications.
It's quite hard to
or-
say sector specialist.
It is, isn't it? Yeah, it's quite tricky to do that one. So some of the were sector specialists in telecommunications, some in pharmaceuticals, some in manufacturing, some in energy, for example. But what was really consistent was what they came back with when we said, what is of value to you? How do you assess value of the companies that you're assessing? And they've basically, I'm summarising a little bit, all of the details are in the research, but summarising a little bit, but the 4 things that came up predominantly were sustainable free cash flow, leverage ratios, the cost-based discipline, and then return on invested capital. So if I may, I'll just touch a little bit on each of those. Now, we didn't ask them to order them in a kind of list of priority. But what came up most often, spontaneously, as the first thing they said was sustainable free cash flow. Because what that gives is the company, it's like a source of strategic freedom. Because what that cash flow gives companies is obviously it helps fund investments, dividends, and helps control costs as well and pay off debt. So that came up first quite a lot. Then we had if you look at kind of balance sheet strength, how a company can absorb any shocks. The leverage ratio, or its debt ultimately, was what we're talking about here. How big a shock can a company absorb without having to go back to the market for more money? That's what analysts were also really interested in. Thirdly, cost-based discipline. That's one of the one thing that's really, as the analysts told us, is that's really fully in the management's control, that they can look at that and really operate. It's a sort of measure of their operational efficiency, if you like. And then fourthly, that return on invested capital. That's really a scorecard, if you like, on how good or how well the management team are able to generate returns on the money that they've invested versus how much it cost them to borrow that money in the first place. So that was the first stage, taking all of that financial analyst community information and then playing it back to the risk and insurance leaders, and that's what we did next.
So that's the view from the financial community. But Dan, what do the risk and insurance leaders say?
So we shared all of that,
Yeah.
all of the above, without putting them into a coma. Risk on return on invested capital, and we shared that with them, and then talked through what it meant to them. The risk and insurance managers would note that they already create value within the business. There's not a debate around that. As Martin said, it's more about how they are able to and ready to translate what they do, to adopt the language of the boardroom, that financial metrics language. So we did a number of sessions with them over that and thought about the starting point for their work, the starting point for their presentations, for their meetings with board and exco. If the starting point is those financial metrics, and then you support that discussion with how risk and insurance can add value to those metrics, then it's a completely different starting point. You're not starting with your risk register and your risk appetite and all of those good things. I keep so the starting point is the outcome that they're looking for within the business. I keep saying when we're talking about this with Martin that to some extent those financial metrics can vary by sector. And I know when you were talking to the analysts, you spoke to analysts from different sectors. I'm ex-banking, and when we did financial results, it was all about underlying profit, which is not an IFRS metric, but a useful one in banking, and also net interest margin. Those were our, big ticket items. But you can say there are some consistent threads through businesses, no matter what the sector, and some consistent metrics. Anyone who's not sure, look at the financial results for the business, and you'll see really quickly what everyone is wanting to talk about and what they're considering a successful financial outcome at the end of the year. One of the other things that came up was the issue of how risk and insurance managers would, for example, talk to their CFO about captives. Captives is an insurance entity, it's a risk financing structure, and sort of quite complex, I suppose, in terms of sitting down with the CFO and talking through the benefits. Now we're bringing online a UK captives regime, a domestic regime in 2027. So we know that it is going to be a subject of the moment. And so part of this is thinking about how risk and insurance managers might engage in that kind of conversation. That was one of the more challenging things that came up along the way. The other thing I would say is this is not going to happen overnight.
No.
This is not instant. It's going to take time, and it's about how we embed it, how we get used to it, how we use it consistently, how we find our way, and how we build confidence in sitting at the table and engaging in those financial terms. So, you know, we're not expecting everything to change overnight. It'll take time.
Well, what happens next?
Okay, so the AMIC conference is the 15th and 16th of June. We'll be releasing the full report at the AMIC conference. There will be a session or seminar at the conference. And then AMIC is running a seminar after that, which I would really encourage people to sign up for if this is an area of interest. Read the report first. It's pithy, it's short, it's a good read, and then sign up for the seminar. And also I would say, just as a reassurance, no one is expected to be an accountant.
Yeah.
We're not expecting people to turn up at the seminar ready to go talking balance sheet and financial metrics. That's kind of the point, really. So it'll be pragmatic. It'll be, how are others doing this? What are some quick wins that you might see from your peers? How does it work? What are the challenges, and how can we help? So yeah, it's going to be a sort of practical seminar.
It was really interesting, if I may, sorry, when you're saying about not being an accountant, because in lots of the interviews with the risk and insurance professionals, when we started the conversation, they say, you do know I'm not an accountant or I'm not a financial analyst. And we said, no, we know exactly what your role is. What we're interested in is how you translate what you do, and is it meaningful and impactful to your boards and C-suites. And they really enjoyed that. I mean, the kind of traction we've got with the people that we've spoken to so far has been terrific. The seminar at the AMIC conference, I think it's on the 16th. We've got over 100 people signed up already, as your team was telling me only this morning, in fact. So we're really looking forward to that. I think it's going to be really great.
So it can be daunting, but that's kind of the point of doing this work. We're not expecting people to be accountants.
No.
It's really about learning the language, what the language means, and learning how to translate the existing value into the boardroom discussion.
100%. Absolutely.
So how could a risk manager, looking at this research, take from it things that are useful rather than, if I say, merely interesting?
Well, interesting's good too.
Sure.
But I appreciate, we both appreciate it.
Absolutely,
has to be useful
we do.
as well.
Yeah.
You know, we talked about risk appetite and risk registers, which are very important in the toolkit. However, for the boardroom, the risk register can be a long list of things that may happen. And what we're talking about here is how to influence, how to translate what risk and insurance managers do into value creation. And that is what is so key.
Well, finally, Martin, what's CNA Hardy's perspective on all this?
Well, at CNA globally, we've got an incredibly strong balance sheet. We're A-rated across the board, deep underwriting expertise, fantastic claims capabilities. We've got great people across the business. Right? That takes a lot of time and energy to build and to maintain. But that's all really just table stakes if you want to be the insurer of choice for large, complex organisations, the likes of which are members of AMIC. Right? To differentiate yourself a little bit further, one of the ways an insurer can do that is to demonstrate how you think. And if you go back to the premise of why we did this research, it was always about what's going to be of value and of interest to the risk and insurance professionals themselves. How can we help them meet a challenge? Now, that's a client-first mindset, which is really easy to say, but much harder to prove. But what this research proves is that that's what CNA Hardy does every single day. And that's why we're really proud of this research. We're really looking forward to the conference when we launch it and what happens. And then also we're really excited about where we can take it after the conference as well.
We have to do it there. Martin Richards, Diane Maxwell, thank you both very much.
Thank you.
Thank you.
And if you do want to have a look at that research and report, it will be available on both the AMIC and the CNA Hardy websites from the 15th of June.